Hello, I'm Finola Burke from RaaS Research Group, and today we're focusing on EdTech company, ReadCloud, ASX ticker RCL. Joining me to discuss the company's recently released FY24 results is CEO Andrew Skelton and CFO Luke Murphy. Welcome, Andrew and Luke, and thanks for joining me.
Hi, Finola. Hi, everyone. Thanks for having us.
Thanks, Finola.
So, Andrew, ReadCloud's 2024 results delivered on your stated targets with 15% revenue growth and positive EBITDA of 0.36 million, which was a 1.1 million turnaround over FY23. Where does this position the company for the future?
Thanks, Finola. The FY24 results represent a significant milestone in ReadCloud's journey. The strong organic revenue growth and transition to positive EBITDA demonstrate the scalability of our business model. We've proven we can grow revenue while improving profitability, and with our enhanced customer retention rates and strengthening technology platform, we're now well positioned to accelerate growth in the coming periods. The business now has the operational foundation and market momentum to drive sustained profitable growth.
And Luke, FY24 was also a year in which you extracted costs from the business, largely through restructuring your workforce. Do you feel there's more work to be done there, or have you got the right mix now for the business at this point in its growth cycle?
Finola, the restructuring in the year just gone has been strategic rather than purely cost-focused, and we've really realigned our workforce to be more customer-focused, and that's already contributed to improve customer retention rates. We expect that we've got the right structure moving forward to execute on our organic growth plans. Our operating costs as a percentage of revenue have declined over the last 4 years, and we think that we're in a position now where we can really deliver and demonstrate that operating leverage.
And Andrew, divisionally, you had very strong revenue growth across the board with ebooks up 6%. Now, that was on higher retention rates, so obviously that's your workforce being refocused coming through there. The VET in schools was up 10% and industry training up 50%. Can you expand upon the factors behind that growth?
Oh, sure. The growth across all divisions reflects both market demand and our enhanced execution capabilities. So in ebooks, our retention rate increased from 69 to 91%. That's really validating our focus on customer service. In schools, we added 39 new schools while maintaining around 90% retention, demonstrating the value that schools are beginning to identify in our offering. The 50% growth in industry training reflects strong student enrolments. We're averaging 54 per month, consistently above our target of 45, plus a successful transition towards higher value qualification courses.
And Andrew, you've stated you've had a strong start to FY25 in the school selling season. This provides a good platform. What sort of opportunities lie within the vet in schools business to grow from there?
Yeah, right. The vet in school segment is presenting really attractive growth potential. We're serving schools across 6 states and territories, and we see 3 key growth drivers. The first is increasing the number of courses per existing school customer. Second, expanding our school base across states where we're presently underrepresented. And third, introducing new qualifications that align with emerging workforce needs. So we're working hard to differentiate ReadCloud from our competitors with the broadest range of course options that's served on class-leading technology and backed by exceptional customer support. The strong start to FY25 reflects building momentum in this business, and particularly with new schools switching to ReadCloud.
And Luke, the company is debt-free and has $1.4 million cash in hand as of September 30. Does the business on its current trajectory need further capital, or is it now self-funding?
Now, well, look, we generated positive operating cash flow in the financial year just gone. We've finished the year with a strong balance sheet leading into the seasonally strong cash generative quarters of March and June. So we believe we're well funded to execute on our organic growth strategy without the need for further funds. And we said that the trend of improving cash generation should continue as we scale the business.
And Andrew, you're building the e-books business in Australia, but you've also secured some international schools. Do you plan on investing further resources to accelerate that growth of your e-books business internationally? And what does that opportunity look like?
Yeah, look, our tech platform enables efficient global reach, and we've proven its effectiveness with successful deployments now in 6 countries. The international schools we've secured, including the Australian International School in Singapore, signing for 3 years, they provide valuable references for expansion. But given the optionality in our business, we're taking a measured approach to international growth, focusing on markets where our platform's unique features, particularly our publisher agnostic model and our collaborative tools, where they're going to provide the clearest examples of competitive advantage.
And Andrew, the company has a stated target of 15% compound growth to FY26. How confident are you of achieving this, and when do you envisage that ReadCloud will be NPAT positive?
Yeah, the 15% compound growth target, look, it's underpinned by demonstrated organic growth drivers across all 3 divisions. We have high visibility on FY25, given the strong early sales momentum, and we're encouraged by our high retention rates. Now, each division has clear growth levers. In ebooks, it's new school acquisition and increased adoption. In schools, it's expanding courses per school, for example, and in industry training, it's growing student numbers. So given our improved cost structure and operating leverage, continued execution of our growth strategy is driving progression towards NPAT profitability in the near term.
Well, thank you, Andrew and Luke, for joining me today. I'm looking forward to catching up with you over the course of the next 12 months to check on ReadCloud's progress.
Thanks, Finola.
Thanks, Finola.